The time has come. I've made a resurgence. Man, it's time to grind. It's time to get mine. Man, it's time to shine. Man, it's good, YouTube, internet, interwebs. It's been a while, bro. It's been a while. Yo, before I get into it, man, I am not selling anything. I'm not telling y'all what to do, how to use your money. I'm just sharing my thoughts. I want to make that very clear because I do not want the interweb police to take care of me. All right. All right. It's been a while, man. Um, there's many reasons as to why I haven't posted in a while, but it's all good, man. I'm back. I'm back. So, yo, I'm about to give y'all some sauce, bro. Sometimes being away from the charts kind of like it opens up your mind in certain ways, but you just have to kind of like always keep an eye on the chart, you know. At all times, I generally know what US 30 is doing because this is the only instrument that I look at. And it took time to get to that point. It took time. So essentially, what I'm showing y'all are like interesting techniques and how to like train your mind to maneuver any particular market. But I will be honest, man, to kind of see what I see or see what an advanced trader sees, you have to spend a lot of time with that particular instrument pair. It could take months, man. It could take weeks, months. It's going to take time. But just look at it as an unfinished puzzle, man. Every week is an unfinished puzzle. So, first and foremost, man, I had my news. I always have my news here just so I can know what to expect because I'm horrible at looking at news, always have been. I've gotten fucked by news many times, bro. Got fucked by news. So always have your news, yo. That's part of my regimen. Always have my news and do a top down analysis. Why? Because some of the things I've realized is you can kind of, you want to think of the market as a game of averages, right? Because you're not going to call, had to clear my throat. Fuck that shit. Damn, need some water. But anyway, look, so you have to play the game of averages, man, and calculate how the market moves every week, every month, how many points on average. So for me, I know that US 30 generally moves about 500 to 1,000 points any given week or month. So if I have that in the back of my head, the very first thing I do, boom, I always mark out my weekly candle open. If you look at my cursor at the bottom left, it says Friday. And when I move to the right, now it says Sunday. So that's why I always mark out the weekly open close because this is that all systems go, boom, market open. The week has started Sunday at 6 p.m. Boom. I like to know, okay, what's going on currently at that price? Well, it opened at a full figure, which is a 34,600. So that's a key price in my head. I'm gonna monitor that. So okay, I have that marked. Now I do my top down analysis from the daily time frame. Why the daily time frame? Well, honestly, in my time with trading, I've seen that the daily time frame shows very good odds. It shows probabilities. It shows good direction, conviction. It's a higher time frame. You can definitely get crazy on the daily time frame, man. If you understand how the daily moves, then you can go down to these lower time frames and really start saucing it up. So on the daily, when the candle opened here, I had this daily inefficiency here. So I was watching price, um, I wanted to sell here. I think I did miss a sell here, but I wanted to sell to this inefficiency because in real time, this was a daily inefficiency. And I prioritized this area because it was an inefficiency. It needed to see buy side pressure, and it was within my US 30 weekly average price movement. You see I'm tying shit in? I'm tying it all in. So if I know that this is within my weekly parameters on average, I can place risk here. You see how that goes? And I'm looking at it from a daily perspective. I'm a day trader, so I'm looking at it from a daily perspective, point blank. So after that, you can kind of look at these highs right here, which is within my US 30 average weekly movement. And I also have this daily time frame here, this daily inefficiency here. And inefficiency is essentially that gap between one candle where the candles don't touch or the wicks don't touch. There's an inefficiency of buyers here. So this is around the 35 100 price. That's essentially a 600 point run in a bullish market. Yeah, I can anticipate price to go that high. I didn't mark this out this week. I didn't see this, to be honest. I'm just now seeing this. But I'm still going to hold weight on this because it's current price. I'm still going to hold weight to this right now because this week ended at the same price it started at, which is, it tends to happen a lot. A smooth displacement, right? So this week's movement was really interesting because it kind of shows how the market generally moves, right? So again, the weekly open was right here, right? The market is rejecting a weekly inefficiency right here in the hot red orange. And here's a weekly open right here. So a lot of consolidation, right? These blue vertical lines represents every single day of the week. So I heard a trader say this, right? And these are one of those things that, like, as a trader, as anyone who's chasing greatness in any kind of field, right? You're going to prioritize listening to people and how they and what they say, like in any kind of like podcast, interview, whatever, yo. You're going to hear certain nuggets and take that shit. So this guy, he said some crazy shit in his interview. I may put it in the description, but essentially he said, yo, the market likes to consolidate 60% of the time and likes to move aggressively 40% of the time. So I'm like, yo, that's kind of dope because that kind of helps the brain understand how to use probability, right? Because you can be saucy as hell with price action, but if you don't understand timing as well as using numbers, averages, and risk, you're just gonna fuck up, bro. And hey, I'm a product of that shit, yo. So the reason I added this here is because, again, this is a weekly open, right? If I'm looking at all this data that just occurred, look at how 70% of the week has just been doing all this shit. You know what I'm saying? And let's be honest, bro. I could have taken a loss here. Yeah, it is what it is. If I had traded that. But I see this higher time frame H1 inefficiency that I had drawn out. And you see this nice bullish displacement, break structure, bullish displacement, taking out these highs. 450 point move towards the end of the week, if I know that the market generally moves in consolidation most of the time, I can place my risk on a short move going down. And the best way to do that is to kind of look for a higher time frame terminus, which is your reasoning to go short. That kind of gives you more conviction. You're kind of tying it all in. And again, I'm also using my knowledge of how US 30 generally moves. You kind of have to tie all that shit together, man. And also, most importantly, this move was a product of news. See how I tied it all together? That's why you gotta have all this shit like right here. News was the primary driver of this bearish move right here that basically just made a complete displacement short. And honestly, if you think about it, this shit right here is win or lose. I mean, you could have fucking lost this shit. I could have lost it too. I wasn't in this move because I just wasn't at the market, but this was an area I was looking at. I would have taken that motherfucker short. Y'all ain't gonna lie. Because essentially what I'm looking at, I'm pedal to the metal. I'm a pedal to the metal trader. I fuck up all the time. But when I see something that makes sense that I've seen numerous times, I'm taking that motherfucker, yo. I probably would have entered here. Right here, look at this. Risk here. Probably take it here. Because this is a balance price right here. Kind of. Maybe on like a M10, it'll be balanced. So I could have anticipated price to come back here. So the best entry really right here would have been this price right here. That's the best 7:50 a.m. pre-New York, right at the H1 inefficiency. Take that motherfucker down here. You could have targeted here. Yo, I'm telling you, like, if you understand how to read this shit, like, you can really fucking kill the market. Honestly, yo, this was the only trade. I was looking at this right here. I think I had like a mock trade here. I don't know if I went short though. I don't remember. This was a nice trade too though. This is a nice trade. So I think honestly I would have lost here because this is projecting a daily time frame. I would have lost any kind of short here. I'm just being real, right? I'm just being real. Let's keep it real. I would have lost that motherfucker. I definitely would have won this one though. And that's the reality of trading, right? Like let's keep it a bean. This was a nice short right here. I don't know if I would have partialed. It depends on how I was reading market at the time. The price did go underneath the weekly gap open close. It is consolidating. This may have made me go to break even. I don't know. But this is one of those 50-50s. I wasn't in it. I don't know. But I damn sure would have been. I would have been in this shit. But I hope that helps somebody out there, bro. Like, this shit is fun, bro. Like, yo, check this shit out. There's mad details on lower time frames, bro. Look at this inefficiency right here. Price came back. Look at that BPR right there. This is the gas I'm talking about. ICT, man. Shout out to that motherfucker, dog. He gave me this sauce. And also shout out to Human, not Human, but Anthony, mighty fine. Shout out to my boy Sam. He's doing this thing in Thailand. Shout out to my boy Woody. Everybody, bro. I might start posting more on YouTube, man. Let's get it. Hope this helps somebody, man. Comment down below, bro.